It is hardly a matter of famine after the feast, since there are 12 FTSE 100 firms scheduled to release their interim results in the coming week, but it is going to be a little bit quieter all the same. That means we can quickly look at some of the macroeconomic items that are due for release. On Monday the 9th of August, we will get the latest Chinese inflation figures, and they will be quickly followed by the American ones on Wednesday the 11th. Central banks are sticking to their view that the current price rises are, in their words, transitory, the short-lived product of economies unlocking, supply chain disruption, and the low base caused by 2020's recession. Bond markets seem to share this view, looking at how yields on government paper are sliding lower, although don't forget that quantitative easing schemes are actually designed to drive them lower. And also, not everybody's quite so sanguine, as some economists look to the classic cycle of higher commodity prices, then higher factory gate prices, then higher consumer prices, and finally higher wages as a harbinger of inflation, and perhaps higher bond yields and interest rates, whether central banks or governments want them or not. Anyway, China's rate of consumer price inflation actually slipped a little bit to 1.1% in June, helped by a drop in pork prices, as well as the relatively high base in 2020 that was itself the result of China's initial emergence from lockdown and a pig shortage that followed an outbreak of blue ear disease. The Chinese number eased some nerves, but America's June reading of 5.4% only added to them, as that was the highest growth in consumer price index inflation since 2008. Also of interest will be the American producer price or factory gate inflation data. Those figures are due on Thursday the 12th of August, and economists will be assessing how they compare to last month's 7.3% year-on-year increase, the fastest rate of gain since late 2010. On the corporate front, we do have another busy slate of announcements, and they'll be mainly first half or interim results releases. Names which may prove to be worthy of note and interest include the following, although do note that these dates could still be subject to change. TI Fluid Systems, Clarkson and Page Group on Monday the 9th of August. Flutter, Gamesys, Intercontinental Hotels and Aberdeen, whatever you pronounce it, it's the firm that used to be known as Standard Life Aberdeen, and that's on the 10th. Then Prudential, Admiral and Phoenix for a trio of insurers on the 11th. Coca-Cola, HSBC, Entain, TUI, Cineworld, Card Factory and M&G on the 12th. And 4imprint, Helios Towers and Anexo will round off the week on Friday the 13th of August. But for all of that lot, the company which could just cause the biggest fuss in the coming week is another insurer, Aviva. The life insurance giant is due to release its first half results on Thursday the 12th of August. The shares have just come off their recent highs, although they have recovered all the ground lost after the pandemic initially hit. However, if you pan further back, Aviva's progress looks less impressive. In fact, it looks dreadful, as the firm's shares are no higher now than they were back in 1990. This may well be why activist investor Shavian has turned up on the shareholder register. The European money managers demanding more cost cuts and at least £5 billion of cash returns from Aviva, equivalent of around 125 to 130 pence a share. No small sum on a share price of barely £4 as I record this. This is not to say that Chief Executive Amanda Blanc is sat around doing nothing. Since she took over the top job in June 2020, Blanc has overseen the sale of Aviva's operations in 8 countries: Poland, Indonesia, France, Hong Kong, Singapore, Vietnam, Turkey and Italy. That's raised £7.5 billion as part of a programme to focus on the core British, Irish and Canadian operations, as well as Aviva investors. Shareholders will therefore look to 1. An update on the strategic plan, 2. Whether the board has earmarked any of that £7.5 billion in cash for returns to shareholders, and if so, how much. Remember, Shavian's going for £5 billion. The current timetable is to do something by the end of 2021. And 3. A progress update on Aviva's plan to reduce what it calls controllable costs by £300 million between 2018 and 2022. Shavian's going for a £500 million cut by 2023. After that, attention will switch to the group figures and performance across the operating divisions: workplace pensions, annuities and retirement, commercial insurance, personal insurance and the advisor platform. In 2020, insurance sales were hit by the pandemic, insurance claims went up and net assets values went down owing to stock market tumbles, at least in the first half. In the first half of 2021, well, these trends have slightly begun to unwind, and in the first quarter, Aviva unveiled 4% growth in gross written premiums and some good fund inflows for good measure. After that, then, in terms of the headline numbers, Aviva produced an operating profit of £1.2 billion a year ago, although analysts have factored in a drop in overall operating profit this year on an adjusted basis, thanks in the main to those asset sales, I would guess. Aviva recorded a solvency ratio of 202% in December and 209% at the end of its first quarter in March. Remember, the solvency ratio measures the ability of an insurer to meet any claims that it may encounter. Aviva has suggested it will look to use any excess cash beyond a 180% solvency ratio to invest in its core business proposition, to reduce its debt, and also to return cash to shareholders. And finally, Aviva, it cancelled its final dividend payment for fiscal 2019 owing to the pandemic, but then paid 2 interims and a final in 2020. The result was a total dividend of 21p a share, though still somewhere below 2018's 30p. Analysts are expecting 22p a share this year, 24p next. The interim dividend may therefore some slight improvement on last year's 7p a share distribution. I hope that you and your families are all in good health and good spirits. Thank you for listening, and I look forward to talking to you again next week.